Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, we are going to look at three undervalued companies that are very close to a breakout and will obviously create an all-time high going forward, right? Now, these companies are fundamentally strong, and we will look at what is the company, what are they fundamentally strong with, and we will also look at the risks because we have to look at both sides. Also, stay till the end because I'm going to show you one more bonus turnaround undervalued stock, which is also close to a breakout. So all of this is coming up in today's video, so stay tuned. Now, before we go into the video, let me thank today's sponsor of the video, which is Outskill. Now, we know that with tariff trade wars going on, fluctuating currencies, a lot of things going all across the world, economies are becoming very unpredictable. But today is a good day for you to start learning more about AI. Now, I know the world is moving towards AI, and every day in our life, I am at least using AI for either stock analysis, questions on GPT, or even using it for a lot of YouTube thumbnails. Now, AI is something that is going to be the future, and you have to be educated in that program. Now, I am excited to invite you for a 2-day AI training program, which is usually 10,000 rupees for completely free, which is done by our incredible partner, Outskill. Now, this is not just any training, it is the world's first AI-focused education platform, which is backed by top AI investors and pioneers, right? Now, what happens in this entire training? You get 16 hours of live training across Saturday and Sunday from 11 a.m. to 7 p.m. But this is also very highly valued because you will learn 20 different AI tools. You will learn prompt engineering for fantastic results. You will also learn data analysis. You will learn how to make professional presentations, AI generated images and videos, and you will also learn how to build AI agents. Now, these are some things that are very important for anyone who is looking to upskill themselves in the world of AI. It's completely free. Go check it out. See if you like it, right? The program is for everyone. If you're in tech, sales, HR, whatever, marketing, you have to go and understand a little bit more about what is there out there in this world, right? And obviously, many people have joined this, and professionals from more than 120 countries have joined this. Now, the spots are filling out fast, so don't miss it out. There's only limited spots. The link is in the description. So definitely go and book your seat now. Now, coming to the first stock. Now, look at this stock, right? This company is called Deepak Fertilizers. In the last 1 year, Deepak Fertilizers has given 150% returns. Now, straight away, all of you guys will be like, Shashank, this company has given 150% returns. That means it will not go up anymore. It is at its all-time high. It is going to saturate and it will never go up anymore, right? That is where most of you guys usually make a mistake because that is not the case when it comes to most companies. Now, let's understand a little bit more about this. Deepak Fertilizers is in the business of agrochemicals, okay? Now, they make chemicals. And if you look at the P ratio, it is currently sitting at 23 P ratio. So even though it went up by 150% in 1 year, it is still sitting at a P ratio of 23. What does this mean? Two things have happened. That means either the sales have become good or it was already at an undervalued P before and now it has come up to 23. So that is either or scenario, right? The ROE is approximately 15% and the market cap is 21,000 crores for this company. Now, if you look at the revenue is slightly choppy over here from a quarterly standpoint. But if you look at from a yearly standpoint, only this year the revenue had basically dipped a little bit, right? Mainly with the profit and revenue. And that was also because of what was going on in the agrochemical space. Because if you know the scene, China was dumping a lot of agrochemicals and specialty chemicals into the market. And all the Indian producers were buying it from China instead of going and buying it from India. So all the end users were not buying it from India. And that became a big scene, right? But if you look at it from a technical standpoint, and if I go here, as you can see, it makes a very simple move, right? It usually follows a trend following momentum where it has a trend upwards, a trend downwards, and then a trend upwards again. Now, obviously, we don't know how up it will go, but just recently, this company has given a very nice breakout. As you can see here, it has given a range breakout and it is starting to create new all-time highs. Now, it's not just this company. If I go to industry analysis and do a little bit of check here, I will also see that agrochemical as an industry itself is in an upward trending mode, right? Now, that itself gives me a good sign. And look at this, all these companies are currently doing really well in the agrochemical space. So obviously this chemical space, even the specialty chemical space, if I show you the chart of specialty chemicals, they are also in an upward trend. So the whole chemical sector is currently going in an upward trend, and you've seen multiple different companies do the same thing. So again, this is a very good undervalued company that has recently done a breakout and can hit more highs, but we don't know how much it can hit, right? But again, what are the risks of this entire situation? Now, if I'll talk about the risk of Deepak Fertilizers, the risk is mainly fundamental. What if China's anti-dumping duty goes away and China dumps more into the market? Then again, the raw material prices goes down, the sales get affected, back to the old scenario. So chemical companies, that is the only problem. China is their biggest problem. They don't have any other problem anywhere. Their biggest problem is China. So you have to keep a very close eye on what China is doing. Are they affecting the market more, or are they just letting it be right now, right? So we will see that's a small window of opportunity that will be created when you look at this company. Now, coming to company number 2, this is a very big company, one of the biggest companies, and it is creating a wonderful pattern. This is called HDFC Bank. Now, all of you know that HDFC Bank was not moving at all. It was undervalued for sure, because from a price to book standpoint, it was sitting at 2008 price to book, right? The market crash of 2008, it was sitting at that price to book. And a lot of people said that HDFC is not a mover. It will not move at all. It is a slow mover and all of that. The time is over for HDFC, but time is never over for HDFC. In fact, HDFC right now has given a range breakout, and exactly today it has done a retest as well. So it's doing a range breakout plus retest. Now, what is the trigger for it to do range breakout? Let's look at the positives and then we'll look at the negatives as well. Positives is definitely that now India has reduced the rate cuts. I mean, rate cuts have happened. So the interest rates have gone down. India has injected so much money into the system, 90,000 crores. That is, quantitative easing has happened into the system. And third, the finance ministry itself has told all PSUs that boss, go and lend very aggressively. So that is the positivity. And we know that now a lot of movement is going to happen in this sector, which is going to make it very attractive going forward. But what are the negatives of HDFC Bank? Now, if I look at the negatives, this time the competition is very high. You have very big players like Axis and ICICI who are now trumping HDFC in most places. And now we have a lot of NBFCs that have also entered other sections, which are giving tough competition for HDFC. So that is the drawback only of this. So I would not expect some insane amount of results or something that is like out of this world, but definitely market beating results can be looked at. But again, you have to keep your stop loss and all of that is very important, right? Number 3, another company that's playing out with the rate cut trend right now is Mahindra and Mahindra, undervalued company, right? Now, if you look at Mahindra and Mahindra, it is currently sitting at 30p. Mahindra and Mahindra is obviously, it's almost like a holding company. It is not just the automobile, but it has other businesses as well. So it is currently sitting at 30p. The profits are doing really well. Let me do yearly. As you can see, the profits are doing really well. Revenues are doing really well. Net worth is also going up. So this looks like a very interesting company from a fundamental standpoint. And if I go back into the technical mode, you will see automatically again, this here is the breakout zone, right? And right now it is knocking at the door of breakout. It has not broken out yet, but it is knocking at the door of the breakout. And this is the range that it was trading in for the last 2 years. And there was consolidation. And now with auto ancillary stocks picking up and doing really well, that means the demand for auto is going to come up quite aggressively. And with the rate cuts also coming in, the cost of goods will also become cheaper for us to accumulate, because cost of borrowing is cheaper, right? So again, this looks very interesting from that point. Fundamentally strong, undervalued, everything is good. But what is the risk? Because we always look at risk. The risk to Mahindra today would be the new EV entrants that are coming in the SUV space. For example, BYD coming with their SUV, Xiaomi, which might come very soon into India, but they're doing a stellar job in China, and they're releasing some really good models that are even better than BYD. In fact, BYD has also done a rate cut or a price cut. As you know, they have slashed their prices across the market as initiating a price war, which will all start affecting Mahindra and Mahindra, because now people will start comparing Mahindra and BYD, right? And depending on features and all of that, because India, as you know, is a very focused market when it comes to investing. Okay. Are you guys ready for the 4th company, which is close to a breakout, very undervalued and doing a turnaround and has a long way to go? Right? The number 4 company is JM Financial, and listen to why this is the case. Look at JM Financial. In the last 1 year, it has done an absolute rally and it has come up to the all-time high. It has not broken it yet, but it has come up to an all-time high. Now, JM Financial is currently sitting at 15,000 crore market cap at an 18 PE ratio, right? Even the P ratio is very small. Now, first you have to understand what happened here and why is it in such a scenario? Why did it fall down so much? And also, why is it going up so much right now, right? Now, if you look at JM Financials, first of all, they're one of the biggest and the best companies when it comes to investment banking. All the deals or most of the deals is taken by JM Financials. They're very strong, but they did a big mistake in the past by lending to bad lenders. And when they started lending to bad lenders, they got a massive blowback from that, right? So now they have decided, okay, we need to run down the bad books and we have to now get into good books, right? Lending book I'm talking about. So that is something that they have done. And now I think they're running down their entire wholesale lending book. So right now you will see that the revenues are not reflecting anything, right? But you will see a small turnaround that will start coming in, not here. But the reason why this entire company is going up is because if you look at their investor presentation, there they have clearly said that, boss, we are now doing a change in our books and we are now moving away from bad lending and getting into good lending, because now we want to capture the next era, right? So if you look at this update on strategic decisions, they have done some recent acquisition of JM Financial Credit. So they're buying more stake in their own subsidiary. 1,500 crores used to increase stake in this one. Okay, highest ever dividend given as well, and significant portion to be used for private market business. Right now, this is their rundown of their loan book. As you see, their problems that they had in the past, the wholesale mortgage book that they had in the past, they're running it down from 4,000 to 3,000 to 2,700. This was the problem that they currently had. So they want to reduce this, loan book that they earlier had, and they now want to get into other things like affordable home loans and all of that, right? So now it suddenly becomes a good thing. And the loan book is currently sitting at 2,700 crores, and they want to completely run this book down. And when this book gets converted and it goes away, and then the good ones start coming in, which is your affordable home loans, like this one, affordable home loans, SEBI MTF. MTF is when you do the trading in the capital markets, and loan against securities, which is LAS. So these three are going to be the new books that will start coming in. So this is still going to take time, maybe another quarter or two, and then this book will be completely gone, and then all their other stuff will start looking very, very, very good. Now, obviously, they are one of the top companies in the space when it comes to corporate advisory, which is your all these IPOs and all of that. Wealth management also, they're very good. Only in their lending, asset management, they kind of screwed up. But affordable home loans, you see now they're starting that book, so it is just starting today. And they're sitting at 15,000 crores. So obviously a lot of changes are happening in this company. So that is again a big thing to look at and see whether this company is continuing to do its changes or not. But again, as we said, we have to look at risk also. What is the risk of JM Financial? The risk of JM Financial is that the wholesale book, when they run down after they finish it, they continue to do a good job on the private markets, and they don't again do the old mistake of lending bad to even affordable home loans. Because even in affordable home loans, you can have high GNPA and high NNPA, which is not a good sign. So you have to be very careful when you start lending. And that is something we have to see what the management does. And does the management come out with a trustworthy face? Do they start capturing the market even faster, or do they go into a very slow pace? So multiple different triggers has to happen for this to do well. And that is why I said this is a turnaround company. So that is why I showed you one, which was an agrochemical space, which was more of a macro play that is happening in India. Number two was HDFC Bank, which is again a macro play with respect to rate cuts. Number three was Mahindra and Mahindra, again with respect to rate cuts, but again a different sector. See, different sector, so that there is less correlation between the two. And then we have finally JM Financials in the financial services space, which is again doing well. Give it another 5 to 10 years, it will do well. So this is again another company to look at. But I've also explained the risks for all these companies, because we need to be aware before we even think about investing in all these companies. So these are 4 fundamentally strong companies. These are not buy or sell recommendations. These are something for you to just go and look at, or maybe keep it in your watch list just to track, so that you learn how things are going to go ahead. Okay, thank you. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye bye.